Alright guys, so now that we have learned the market maker model, now that we know how to find our daily bias, the monthly bias and the weekly bias, now we are going to use I'm going to teach you the complete model that has like the best win rate out of everything that I've taught before. This is like the, I would just simply say the best strategy out of all, okay? And I'm not even over exaggerating right at the moment. If you can apply this strategy correctly, you are gonna pass challenges. You're gonna become a consistently profitable trader, and you will not rely on other people or other people's signals. Okay, so here is the complete model. Number one, we have to look for external and internal liquidity. We have to determine our bias. Okay, so we are going to use 3 time frames for this strategy. Okay, previously we used 2, right? But remember, in the beginning of the update I said that we're gonna use the 3rd time frame as well later on in the course, right? So let's assume that this is the daily time frame, this is the 1 hour time frame, and this is the 5-minute time frame. Because remember, for the daily, we're going from daily to hourly to 5-minute. Okay, so let's say that you have a purge on the external liquidity on the daily time frame. Okay, and you have the fair value gap in the discount over here. That should be your draw on liquidity. So now once you have the purge, you simply drop down. Let me mark this out like that. You drop down to 1 hour time frame. So now price has taken out this daily high, which is the external liquidity. So now you're waiting for that time frame to align with your narrative or your bias for the daily. So you want to wait for a market structure shift. Once you have a market structure shift on the 1 hour time frame, after price takes out the daily high, right, and you have the target here, which is the fair value gap. Now notice here very carefully. When price did a market structure shift, there was a fair value gap, right? There was a PD area. It could be an auto block here, it could be a fair value gap. Price comes into that fair value gap. So now, right, I have from here to here, this movement, okay? So from here, this is the fair value gap, this right here. I zoomed in a bit, okay? So now once the price goes into the 1 hour fair value gap, we want to drop down to the 5-minute time frame. Okay, so from daily we go to the hourly time frame, we look for a market structure shift, we wait for the price to come back into the 1 hour fair value gap, and once price is in the 1 hour fair value gap or auto block, we drop down to the 5-minute time frame. So now this move from here to that PD array, we have to look for a market maker model inside this move. All right, so when price goes into the fair value gap, the move starting from here must have a consolidation, a first consolidation, right? So now this right here is here. Okay, look at this price action. I have zoomed in and this is what it looks like. So what do we have here? We have consolidation, right? So that is going to be our target. What do we have? We have accumulation phase 1, which is consolidation number 2, right? What do we have then? We have a market structure shift when price came into the fair value gap, and then you can simply look to take your entry from the fair value gap or auto block. From here onwards, when you get a market structure shift on the 5-minute, every single PD area is going to be respected. All right, every single fair value gap, every single auto block. You get an entry here on the fair value gap, right? You have a break of structure, you take your entry from the fair value gap, you keep on doing that until this level is taken out. Make sure this level has consolidation, guys. Okay, so we don't even look at the fair value gap. We just know that our draw on liquidity is here. The higher time frame draw on liquidity is here, right? But then we want to use the 5-minute time frame to increase our chances, right, to win the trade, right? We want to increase our probabilities here. So we look for a market maker model inside this move from this bottom low to this high into the fair value, into the 1 hour fair value gap, right? And once price comes into 1 hour fair value gap, you look for and scout out the market maker consolidation in this leg, right? In this leg around here, starting from here. Originally on the 1 hour, this would have been our target, this fair value gap on the daily time frame, this over here, draw on liquidity. But on the 5 minute, when we drop down, this is where we want to identify and scout out the market maker model. So now when price comes into the fair value gap, look for a market structure shift, take your entry, break of structure, entry, break of structure, entry, and remember mitigation blocks, right? So if a mitigation that we can utilize every single mitigation block inside this move. So we have a order block here, price touch like that. Let me just draw it out like that. Wait. Boom, 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 boom. Once this target is taken out, you are out of the trade, guys. Very, very simple.